All right, journal entries. So this phase of the accounting cycle is meant to help us properly record the transactions that have occurred throughout that period. So what usually happens in a transaction is we give something and then we get something in return. So if we call up a supplier and we're just inquiring about a package of fruit that we're gonna buy to sell, whatever the case is, but we did not actually buy anything, then that's not a transaction. Nothing happened. We made a phone call. There's nothing to record there. However, when we actually go and purchase the fruit, we give up our cash and we get the fruit in exchange, then a transaction has occurred, then we need to record it. All right, so when it comes to journal entries, if you have not already, make sure you go back and review the video on debits and credits. I've kind of summarized the information here again, but I won't spend our 5 minutes going over that. All right, so let's go with an example. So for example, we're in the business of selling cupcakes. In order to make our cupcakes, we need supplies, right? So we go out into the marketplace and we purchase supplies. All right, anytime you're presented with a transaction, the first thing that you need to ask yourself is, what did I get? What did I receive? And then what did I give up? In this situation, what did we get and what did we give up? All right, so we gave up some cash, right? We had to spend some cash to get these supplies. So if we're thinking about it, we're looking at our assets versus liabilities and equity, all right? Where does cash fall? What kind of account is cash? Cash is an asset, right? So how do we decrease an asset? Remember, it's going to be the opposite. We're going to increase on this side with a debit, and we're going to decrease with a credit. So if cash, which is an asset, is going down, then we're going to have to credit cash for however much, okay? However, what do we get? We got some supplies, right? Supplies is also an asset, right? Supplies went up, so that means we're going to debit supplies for whatever amount. And then this is what our journal entry is going to look like. Every journal entry will have two parts. You'll have a debit and a credit. You can have multiple debits and multiple credits, but you have to at least have a debit and a credit. Do you know why? Because this equation must always remain in balance. That's what accounting is all about. Our goal is to make sure that we remain in balance at all times. So let's say I put some numbers to this. Let's say instead of XX, we have $100 worth of supplies, okay? And just as a side note, remember, we never put dollar signs in our journal entry, so it's just straight up the numbers. All right, so we have $100 here. If we go back up to our original equation here, both of these are gonna be assets, right? This is an asset and this is an asset, okay? So the change is gonna take place on this side of the equation. All of it's gonna be on the asset side of the equation. So what happened? Let me just erase this really quick. Running out of board space. All right, so what happened? Our assets went up by 100. We added 100 for the supplies, but then we also spent $100 in cash. However, is our balance, is our equation still in balance? Absolutely. If we balance this out, that still comes to zero. We're fine, we're happy, we're extremely okay with that. All right, let's do one more quick example. All right, so let's say that we did some work. We're a cupcake seller, so we sold some cupcakes. All right, so if we sell something, what do we get? Well, hopefully we're getting some cash. Now, we may not always get cash. We may get accounts receivable, meaning a promise for the customer to pay us. But for right now, let's just say we got some cash. Cash went up. Cash is an asset. Therefore, we're going to debit cash. We sold our cupcakes for $50, okay? Now this may be a little tricky for right now, and we'll go through this a little bit more later. But so we got cash, what did we kind of give up? Or what's the other side of this? If we sold something, if we're in the business of selling cupcakes and we actually sold some cupcakes, then the other part of this is gonna be revenue, okay? Now, cash is an asset, and we'll talk about this in probably the next video, but our revenue is gonna be an extension of equity. So our revenue is gonna go up 50, cash went up 50, 50 is equal to 50, therefore our formulas still remain in balance. All right, once again, if you have questions, please just drop me a comment, and yeah, all right, thanks.